Hello, this is Steve from the Free Bullion Investment Guide. Today is January 26th. I'm doing a review and outlook for the US dollar, and this is the US dollar's daily chart. Just real quick, I did put out a additional video, well, an interim video, I guess you could call it, on the 23rd that had showed that the video that I did on the 19th, which is right here, in that video, all the patterns were confirmed on the 23rd, and that's the reason why I put out a new video, but practically nobody's viewed it. So I'm just letting you know that the reason why these patterns look different is because they're much different from the ones that were in over the weekend, because I put out a new video on Wednesday the 23rd. So I'm just giving you a heads up and letting you know the reason why we have different patterns here. So we had a falling expanding wedge, a much larger one that was broken, and now we have another falling expanding wedge that was broken on Thursday. I also mentioned a hypothetical that I was seeing a pattern of an inverse head and shoulders, that this may be, it may turn out to be the right shoulder of an inverse head and shoulders, and it did turn out to be that way, because on Thursday, the dollar shot up in price. It broke the upper trend line of the falling expanding wedge, and it broke the right shoulder, the neckline of the right shoulder broke the neckline of the inverse head and shoulders. So even though the inverse head and I could still, as long as the dollar doesn't fall below the head of the inverse head and shoulders, it could technically still be called an inverse head and shoulders. But right now I'm skeptical of what the dollar will do, because most in the market expect a dovish Fed's report to come out on the 29th and 30th after they have their meeting. And it's really up in the air what the Fed's going to do. So that's the reason why I'm not going to call another inverse head and shoulders. But I am going to keep the falling expanding wedge. I'm just going to expand it. And who knows, we could see another inverse head and shoulders. But the falling expanding wedge, we'll just call it. And I also see a rising expanding wedge, which can be called right here. Now, it is very broad, and the falling expanding wedge is the falling expanding wedge here. It looks really confusing in some ways, but the falling expanding wedge here is a positive pattern than the rising expanding wedge, even though I don't like to do it so close to a close. And what I mean by that is, with a bearish candlestick, the closing price, there's practically no low there. So I don't really like to do that, but I'm going to go ahead and do that on this one. So the falling expanding wedge we'll put over here, the title of it, and the rising expanding wedge, just so it doesn't look too confusing, will be right there. And as far as what I called last weekend was for the dollar to move sideways, and that's really all it's doing. It's breaking patterns left and right, but it's really just moving sideways, and that's really what we can expect more out of the dollar. The $96 level really isn't support or resistance right now. 95 and 97 are the two stronger resistance and support levels. So I would expect to see the dollar move in between these $2 areas, and quite literally just continue bouncing in between. Nothing. The end of the government shutdown was announced yesterday, but the trade war is still continuing. Venezuela is heightening and tensions between the U.S. and the rest of the world with Venezuela. Quite honestly, apparently Russia and China are also coming to the aid of, or at least, saying what they want to say as far as trying to back up the government of Venezuela. But who knows what's going to happen through all that? It's still very much in the air, and that's another reason why we'll continue to see more sideways movement out of the U.S. dollar. So until next time, until either one of these patterns are broken or a new pattern is formed, I will post a new video. So I thank you for your time, and take care, and God bless.